Hey guys, so today as we start our technical analysis section, I actually wanted to do something a little different. I wanted to step away from the slides and actually show you some things about the candlesticks from the whiteboard. And the reason why I'm doing this is because this part of teaching charts is actually a lot easier when you're able to visualize it. So there's three parts that I want to quickly go over with you on a whiteboard before we go back into our slides. The first one is, what are the different parts of a candle? Because when we're looking at charts, in my strategy, we're looking at candlestick charts. And with candlestick charts, you need to know, like, well, what is a candlestick? So that's our first thing. What is a candlestick? What are the parts of a candlestick? Then the next thing is, when you put those candles together, they actually tell a story. So I want to talk to you about the story of the candles. Because when you're reading a stock chart, you need to be able to say, what story is it telling us about this stock? What is it telling us about the stock price? What is it telling us about the buyers and sellers, right? And then the last thing I want to cover on the whiteboard before we go back to slides is the formations that are super important to us. And these are going to be quick videos, but they're just really like essential basics that you need to know before I start teaching you how to read charts. And then somebody's gonna ask me, well, Teri, why is it so important that I read charts? Like, you know, I got your reward to risk ratio. I know how to do the basics. So why is this part so important? Because you can have a great company, but it might not be the right time to buy that stock. And I think back to, there was a time where I really loved AutoZone, and AutoZone had gone up to like $1,200. And I was like, I love AutoZone stock. I think it's going to be a great stock. It's made a ton of money for me in the past, but at this point where it is on the chart, I shouldn't be trading it. It's at its all-time highs, or it's in a seller's level. And so although we have a 30 list, like my 30 stocks in the watch list, there's going to be certain times that are good to trade each of them. Sometimes some of them are in a level where you can trade them. Some of them may not be. They may be in a level where we're watching it. But you have to learn how to read charts to understand when's the right time to buy a stock. So that's why we're doing this section, and that's what we'll cover in the next few videos. So this first one is the basics of a candle. So there are a couple things that you need to know in general when you're looking at candles. The first thing is, each candle has three parts. It tells you where price opened during that time frame of the candle, where price closed, and then the price action during that time frame. So in my strategy, we'll usually use daily candles. So what does that mean? That means that over the time of the candles that we're looking at a full day of the market. So this is telling us, where did the stock price open when the market opened that day? Where did the stock price close when the market closed that day? And then where was the price action throughout the day of that day? That's because we're looking at daily candles. Now, there are times where I may tell you, look at a bigger time frame. So look at a weekly time frame. So where did price start that week? Where did price close that week? And then where did the price go throughout that week of data? That would be a weekly candle. And then sometimes I may say, well, no, I want you to zoom in a little smaller and look at 15-minute level candles. So on those 15-minute level candles, our time frames would be, where did price open that in the beginning of that 15 minutes? Where did price close at the end of that 15 minutes? And then where was the price action during that 15 minutes, right? So each candle has a time frame. The one that we're going to use is mainly daily. And then these are the three things that that candle tells you, all right? Then you have, well, what are the parts of a candle? There are two big parts that are important. One of those parts is the body of the candle, and we'll talk about that in a second, but the body of the candle, and then you have the wick. The wick is going to be that price action piece. Where did price go throughout that time frame, but maybe it didn't end there? So let's talk first about this body and the wick. So every candle has those three parts, but they can be in either order. So the price can open up high and close lower. Let's make the line like this. So price can open high and close lower, or you can have that price opens lower and closes high. And sometimes you have really small candles where they almost open and close around the same level. So sometimes you see a candle that looks like this, and maybe you have that it opened here and then closed a little lower, but not too much lower. The difference between that open and close is going to be your body of the candle, okay? The body of the candle. So here you draw two lines between your open and close, and this gives you the body of the candle, okay? And then I know oftentimes you guys probably see colors on these, right? So if the stock price opened up high and then closed lower, that means that it went down during that time period. So if we're looking at a daily candle, that means that the stock price went down over the day. This would be a red candle. Now what happens though if it opened here, the stock price opened here and it closed here, but during the day it had actually gone lower than where it closed? That's when you get the wick. The second word, that's when you see the wick coming down. Or maybe during that day the price had actually gone up higher, but then it came back down. So what this one might be, we were thinking about like telling the story of this candle, the thing that moves stock prices up and down is buyers and sellers, okay? So in this one, the stock price might have opened here, and then in the first hour of the day, it kept going higher. But then at around 11 o'clock, it starts going down. And maybe it goes all the way down here, but then you have some buyers come in, and we'll talk more about those, how those buyers and sellers impact these candles. But you have some buyers come in and the stock price comes back up to the close. So that's what this wick is saying, that at some point during the day, price came down to these levels, but it just didn't stop there. It between the open of the market and the close of the market, this is where we were in the body of the candle, okay? Because this one, now moving on to the next one, because in this one, price opens down here and then closes up higher, then we know that the price during that day is actually going up. Let's say in this candle, this stock opened at $100 per share at the beginning of the market, and then during that day, it actually went all the way up, and actually, let's say it went even higher than this. Let's say it went up like really high during that day, but then at the last hour of the day, it starts coming down a little bit and closes here. The candle might look something like this. But because the stock price went up, this would be a green candle. All right? And unfortunately, my little green candle is not working right now, so it doesn't really show much, but just imagine that would be a green candle. Okay? And now somebody might say, well, Terry, there's no wick at the bottom. Well, sometimes if price never comes down lower than where this candle opened, there would be no wick. But if at some point price did come down a little lower than where the market opened, then we'd see a wick down here. So it'd be like the market opened, at some point we came down to this price. So if we had said this was 100, maybe at some point during the day it came down to $95, but then it kept going up, went past this up to here, maybe at 105, and then came back down and ended at 103. This is what that candle would look like. But eventually, price went up throughout that day, so this is the candle. And this would be green. Then we have some where, like I said, the body of the candle is really small. And this is called a Doji candle. And the wick can be long, like the wick could be super long, but the body of the candle is really small. And what does this tell us? This says that, you know what, at some point during the day, price went all the way up here and price went all the way down here. But by the end of the day, the open and close was pretty much the same. The stock didn't really move very far. And what we would say when we're talking about the story of the candles, we know that this is, the only reason price comes down is because of sellers, And the only reason that price goes up is because of buyers. So we would actually say that this is when the buyers and the sellers are agreeing upon a price. Okay? Because they're pretty much saying that we think this price is about what the stock is worth. So if it opened up at $100 and maybe closed at $99, that range is about where we think this stock should be worth. That's what this smaller candle is saying. All right? But now at least you know the parts of a candle. And because this opened, it opened higher than it closed, so it closed down low. We know that price throughout the day went down, so this would end up being a red candle. Okay? So I'll give you a second to just look at this one more time. Those are the parts of a candle. Now we have to say, what do these candles tell us about the stock? And we'll go over that in the next video.